Okay, morning all. So yesterday, after the large move in the market, we had a pause. We did have that selling pressure right on the open, which was normal and expected after such a big move, inflation data coming out. But buyers stepped right in. And so we saw that both in the NASDAQ, in the Qs, and in the SPYs. We did retest. This probably looks very similar to the Qs. Retest of the prior, the high from Friday after hours, and solid close. So what you want to see, if you're looking to see if the market's going to go to the next major resistance area, if you break the downtrend, is buyers to step up and to consolidate against prior failure areas. And that's exactly what happened yesterday. So if we look at the Qs, should look pretty similar. Let's see. And in the Qs, we had this, it was like 305, 306 area. There'd been selling pressure here. We went down into the 280s. We bounced back up. We failed. We made the new low, consolidated for a couple of days near the low. So it was very dicey until we, in fact, broke to the upside on Thursday. So it was going to resolve one way or the other. You can kind of still see the X's from the other day. It resolved to the upside and really nice follow through. All the way back to 310 on the Q. So if we zoom out, same thing I said yesterday morning, we still have this area up here if we get another leg up. And, the market's going to look really strong. If we get up to that area, the market will look really strong. People will start to get more bullish. They will say the pullback is over, which may in fact be the case, but that's not certainly my base case. My base case is we have a nice bounce. Back to the original, this area here where we failed and had the big bounce. And this would be, pretty comparable if we, we'd have to get, a little bit higher up to here for it to be comparable to this bounce. For me to have a larger view in terms of us going back up, into this area here, I think that just would take some time. More data, low inflation numbers, continuing to see decent growth numbers, not signs of a recession coming up around the corner. So, but there's enough people who got out. There's enough people who, as they see more strength, will want to get back in, and that creates these bounces. Ideally, we would, get back up to this area here and get there quickly, so it would set up as a good spot to be short. Otherwise, I'm not thinking about the downside unless we, take out yesterday's lows and start to hold below there for a day or two, and that kind of sets us up for lower prices. So we do have a couple of stragglers reporting. It is in the middle of between the next earnings season. I forget, CRM is always kind of comes out of nowhere in the middle, and it actually is a very liquid stock to trade. So the deal with that was they did have a good EPS number. They guided down. I'm assuming that was expected because of it's already down almost 50% from the high. But the margin, even with the guide down on the revenue, EPS numbers are going to be okay, which means margins are good, which market always likes that. So it was up to $300, above a $300 stock, came all the way down right around, I guess this was the Ukraine invasion, down to about the 180s. You can see once it took that out, it did bounce back twice to it. See how these concepts we talk about all come up over and over again, but the initial low bounced. Once it reached that and it bounced back up, it failed twice before making a new low. So it's in a strong downtrend, but it's very far from the high. And I think that is why you're seeing a solid reaction, even with the guide lower. But you're not going to really change your view on this. It would have to. Oh, and by the way, all the analysts brought down their price targets. They use this as an opportunity to bring their targets down from, I don't know, the 300s down into, I would say, down into this area here. So they've readjusted people's expectations, as they always do. Very unusual for analysts to lead with price targets as opposed to follow. So here's the initial reaction, got to one. So 172 seems really important to me. What do I have on the sheet here? Let's see here. So we've already taken out R1. It's actually already broken to the upside. It's basically already broken to the upside and is trending towards R3 on the sheet. So we'll see if that holds up on the open. Maybe you'll get a little bit of a flush on the open, but as long as it's above S1, let's just say the focus should be on the upside. If it does spike before we even get to the market open today to like 179, 180, you want to see if it flushes. At that point, I would be thinking, okay, maybe it'll flush into like 176 or something like that. What's our volume level? So it's done almost 500,000 shares. It could be really good to trade. I've most times been able to make money on it right on the open. You just want to be a little bit careful about chasing. It's already up 10%, almost $17. It's probably a better fade if it gets a little bit closer to 180 in the pre-market. Otherwise, we want to see it. We want to see it from here come down from 177 back to R1 to 175 and see if it supports there. The SCO, they crushed EPS. Guidance was okay. Let's see what this has done. This is more of a range stock. Let's see, where's the daily? It looks like it IPO'd. It's in a downtrend. Yeah, CRM definitely is a little bit stretched. So we'll see. The danger is, of course, if you're feeding it right when the market opens, things tend to, as we've said a million times, we'll put in the highs or lows right on the open in many cases, and it can get stretched another $2 or $3 before coming back into range. Okay, so where are we? We're up $4.50. This is up also over 10%, from 41 to 45 and change. We don't have a lot of volume here. We've only got 60,000 shares. I'd have to, on the open, I'd really actually have to see it holding above, well, I did put up 45's inflection on the sheet. So I still think that makes sense. So yeah, if it's above 45, you can look for it to come into the downtrend. If it's below 45, retest to 42, that would be S3. So yeah, so 180 is going to be a magnitude. Jan put in the, well, to me, not you guys can't see it, but there's a lot of open interest for options at the 180 strike price, which could be a magnet, especially on Friday. APPS. So the numbers were okay here. I think the market reacted initially going down because of the delay in the annual filing, but they acquired two companies. So that wouldn't be that unusual to have to delay an annual report when you've had a double acquisition. There's a lot of accounting and books to be merged and that sort of thing. So I think that's probably why it flushed and then came back a bit. So let's zoom in and just take a better look at it. Oh, the other thing is their guidance. It seems like they guided for their core business and didn't guide for what the revenue is going to be with the two acquisitions. And so I think that created more confusion. Let's do it with like a 1 minute. So here's me delaying the filing, et cetera. And it flushed to below $20 a share. Now it is rolling over again. So what do I have on the sheet? 23 as R1. It's already at S1. So I thought in the after hours when they flushed it and it came back up, they were supporting it above 2150 for a while before it really bounced. So That's that. I mean, ideally, right on the open, they'd flush it to like $20. There'd be some bids there, and you'd kind of see it reverse. Otherwise, I mean, this is down a lot. Let's see here. They're still grew. I think they grew like 97% year over year on revenue. There's definitely some upside on this. It seems like a very dangerous thing to be short. So good that they created the confusion with the filings, et cetera. But the prior lows, 21 and a half, 22, it's bounced there twice already to like, 27-ish, 27 and a half. So yeah, I'd be looking more on the long side here. It would really have to be like consolidating below $20 for me to think short. I put Microsoft and Apple on here. Just I think after the market bounced and people are feeling a little bit better, it's a lot off the lows, but people will think lower risk. The leaders, Microsoft, Apple, they took out those lower prices pretty easily when the bounce started last week. Now, especially Microsoft is above. So if we go back to this earnings report here, where it was like 270-ish, it's like holding above 270 now, and so that brings this 277 to 280 area into play. So that's the one I'd be curious to see if more people step into the large cap technology. I think Apple's coming back to the key where it broke down from, which is 150. That held for ages before it recently broke down. You can see that was the low on beginning of March before we had that huge market rally. March 15th. And that's also where it kind of broke out and had put in its all-time high. So that's kind of big too. So, you have Apple's more of a breakout situation. If it has like a strong drive above 150 in the morning or at any time, and Microsoft is more into coming into like the next key resistance. So that is that. I put GME, and GME is after the close. So that already came in a bunch from the crazy move last week. Let's see here. So that went from 90 to 140. I think last time we looked at earnings, it spiked up on the earnings or something, then got sold pretty hard or something like that. So here you can see a few days in a row sold from 140. And what we talked about, I think on Friday, was it had to start holding below. You can actually see this action on Friday where it did flush right on the open below 130, but it just couldn't consolidate below. Deeper flood. It's a little bit hard to trade this scenario yesterday because it went so, you can basically drop 130 and just kept on going right almost to 120. You got a retracement, I guess, back to the support from Thursday, which you could have shorted against 130, and that did work. So you're basically now 120 support by 128 by 130 resistance, and I'd be thinking continue to short it as long as it is below 130. And then Chewy, a bunch of people I think lowered their targets. They report after the close. This is very beaten down. They warned last quarter, so it's consolidating at the lows. I suppose if they were to warn again, it could break down. Let's see where it was when it IPO'd. Here's the IPO. So it was a $32 stock when it IPO'd, 20, and it's right at this support. It's basically right at its low from when it's IPO'd. So that's got to hold on. Down from $100, lower high at 50. There's some upside if they give good guidance, maybe to like $30, $32, something like that. It's very beaten down. All right, I gotta go. As always, be patient and good luck.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us